Good morning, active traders. Take three. Good to see you all here. Can you all hear me now? Wanted to welcome you to today's Trading Week Ahead broadcast for today's Saturday, June the 18th, 2022. Everybody hear me okay? Hey, Phil. Hey, Brian. Hey, thanks. Thanks, Jim. All right. Well, what a week it's been. We've had so many good opportunities to trade both the long and the short side. You can see, oh, this is the Magic Kingdom. That's Disney. I mean to look at our S&P here, which looks remarkably similar. So this is our S&P chart. You can see it kind of fell off the cliff after a brief bounce back in late May. We've been selling down the last week or so, and we're likely to see a lot more selling in store in the upcoming weeks ahead. So how many of you are playing the market short correctly by trading inverse ETFs like SQQQ and UVXY and SQs, TZA? We got so many other ones. Yesterday, the story was in oil, right? I was trading SCO all day long. Was anyone else trading SCO, the short crude oil ETF? That's one that did a really nice run all day long. It was really easy to trade. I traded like 6 times, I think it was. Really easy. We'll look at that chart in just a minute, SCO. But that's a good example of how to capitalize, at least I did, on the drop in oil prices by shorting oil using the SCO ETF that goes up when oil goes down. Anyway, let's start off with our S&P. We've had quite a drop here lately. Yeah, it's been a good week. All right. Hey, thanks, Kat. Hey, Wendy. DRIP. Okay, yeah. That one I haven't traded, but I remember that one. DRIP. It's the opposite of GUSH, right? There's GUSH and DRIP, and then there's SCO and UCO. Long versus short bias oil ETFs. When the market's been fairly strong in its sell pressure, we're looking at 3,600 support, 3,750 resistance on this chart. And if you take a look at the VIX, which is, in my humble opinion, more important, and say our VIX is back up to, come on, VIX. There we go. Our VIX is back up near 32. So the VIX had been on a decline. And if you guys remember, not to say I told you so, but remember a week and a half ago when it was down to 25, I said I'm sure it's going to get back up to the 30s. And that's just what it did last week. The most important thing that I will tell you is this. The bears are back in town, baby. No, the more important thing is the VIX is in consolidation here. What you want to pay careful attention to for a good professional trading approach is follow the VIX at 36. Follow the yellow brick road. Follow the VIX at 36. That's easy because it rhymes. That's resistance. I want us all to keep collectively our attention to VIX. If the VIX spikes over 36, we want to load the boat with UVXY, right? Like I've been doing. It's been a nice run. We have 24 support. Remember last week also I drew a horizontal line at 24 and I said that's support. We're likely to pivot off of that. And that's exactly what we did. The problem now is we're in a consolidation zone, which is why last week was kind of choppy, right? Last week we had our up and our down days, but it was kind of a mixed bag. And the reason is the VIX is at resistance. That's really important. That's very strategically valuable intel. Is pay attention. Any street trader, if my institutional clients were hiring me and I was doing Zooms with them, we'd be looking at those patterns with VIX at 36.4, I think, technical resistance. And we've got immediate support here near 30 and then down to 24. The main thing to do, what this means to you as a trader is, we want to short the market if the VIX spikes over 36. We want to buy the market on dips, on bounces, if the market loses, say the 2930 area. So what we want to pay attention to very carefully is this consolidation of 5 VIX candles up near resistance. That's the key signal for the, you don't have to trust me, but test me out. Pay attention to what the market does if and when the VIX gets out of its consolidation region up there. Okay, so that's the most important thing to pay attention to. Now moving on, excuse me. Our oils have really taken a hit. Look at Chevron. As the price of crude has dropped. Excuse me. As the price of crude has dropped, so have the oil stocks. We're looking at Chevron, Halliburton, Occidental Petroleum, Southwestern. The only thing green is shorting crude when it comes to the world of oil this past week. Now, what does that mean to you as a trader? Excuse me, I have to get a throat lozenge there. Losing my voice. I've been doing so much broadcasting. Anyway, take a look at these patterns. Chevron dropped. Halliburton also taking it down. None of these we want to buy. These are all terrible charts to buy. These would be to short on continued weakness. You may get a dead cat bounce. Round, bad giddy. Whoosh. A little bit, not worth trading. We look to short new lows in these. More importantly, what I want us to pay attention to, excuse me, is our short crude ETF SEO. Now there's substantial upside to shorting crude oil in using our SEO ETF, and this is one of my top picks. This is one of my top 3 picks, and I walk my live room members through this every day. We go through support, resistance, and trigger points for various stocks and ETFs, and this is one of my favorite picks for us moving forward for plays. And if the drop in crude oil, Brent crude continues, this will be good for a lot of points. So this may well be good up to 35.40. My exit target is around 38 on this. Okay, just so you know, my exit target, I'm already in this long. How many of you are trading short crude oil? I was day trading all day long yesterday, and I bought some into the close to start off a swing trade position in the next week. So remember, we do have a 3-day weekend, so markets don't have open until Tuesday. Hey, good to hear, Brian. Hey, good to hear, folks. Let's see. So anyway, this one's between, so I'm looking to scale up significantly between 20 and 25. And what I do is a martingale approach. So every $2 worth of price action or so, I usually double down. So, let's say if I start with 100 shares, once it gets to like 24, I add another 100, it goes to 26, add another 200, it goes to 28, add another 400, and by the time it's up near 40, I'm up well over 1,000 shares and hugely in the money. Or you can add decimal points if you trade larger size. And the point is, this is a really good opportunity. This is one of the best swing trading opportunities I'll bring to you is short crude oil with the SEO ETF for swing trade and day trade for those of you who trade it. Now, just a reminder, I do cover all this and more in my live trading room at trademastery.com/live. Just a quick mention here, for those of you who are not yet members, I'd love to see you on board. We have so many smart members from around the world. My growth has been spectacular. So many new traders, and we have lots of eyes and ears. So a lot of the day's top picks come from my traders. I have a lot of smart traders on board, and as a team, as a community, so you don't have to trade alone. We cover some of these the best charts. And unlike other people, we don't scalp under $10 stocks with thousands of shares with the hockey video game kid approach. So we take a more conservative, more easy to follow, more step-by-step approach to alerting our members. So what I do is I post not only a watch list each morning, but the specific entry prices to use before the opening bell. So you've got lots of time to put together the day's trading plan. Over half an hour. We meet starting at 8:30 in the morning. So we talk through all the charts. I'm there for a full hour answering questions, going over new charts, identifying the day's gappers and where to trade them, and also pre-market alerts, which is something a lot of places don't provide. I do provide where to go in pre-market because a lot of great opportunities occur before 9:30. So for those who are intraday traders, we do that. And for swing traders, we also have step-by-step tips on the charts that have the best two-day high breakouts. So it's something to pay attention to. So join now at trademastery.com/live if you're not yet a member. Take a look at the hundreds of testimonials on the site, including video testimonials. Anyway, short crude was good yesterday and likely to. The other thing we noticed too, visually, do you notice the volume is large, right? Large green bar means lots of green buying volume. A lot of other professional traders like myself were buying this for a anticipated move next week and the week beyond. So for that reason, you always want to take a look not only at price action, but for reversals, you want to see high volume on the pivot on a green candle. So that's one thing we see. Now this thing was a piece of cake to trade yesterday. I got most of my trades done by 2 o'clock. I stopped trading it right around, actually I think my last trade was right near the 21.6 there. So I missed the last leg of it. So I did not trade this and I didn't trade any of this, but I was out right there. I was day trading in and out of this thing all day yesterday. So easy, right? And it ran all the way from 19.5 up to 22. So over a $2 run in the short crude oil ETF. And this was a really easy one to trade. And these are the kind of charts I like to cover in my live room because they have consistency, right? I like charts that are consistently up. I don't like haphazard, cheap, low float stocks that pop and drop and all that kind of stuff. I like things that go up and keep going up and then keep going up some more. That way we can either get in and out or get in and then scale in for a continuous play. So that was a really good chart in SCO yesterday. LabVIEW is also pretty healty. Now I do cover under $10 stocks like LabVIEW. I was trading this myself. Oh wow, a lot of questions. If you have any questions, don't raise your hand, but instead type it in text, and I'll be happy to answer. Yeah, so anyway, this thing ran 4.5 to 5.5. So for a cheap $5 stock or ETF, the biotech long LabVIEW up nicely. Also, our inverse natural gas. I do a lot of coverage on ETFs, by the way. I love trading ETFs. I prefer trading ETFs over stocks, truth be told. And the reason is why. Overnight gaps, bad gaps, are seldom large, right? Adverse gaps are always under $1 or $2. Unlike stocks, it can have a huge gap against you. So overnight holds, I think, are less risky with ETFs. And also, they tend to have more consistent chart patterns. They tend to be more consistent in their breakouts versus haphazard like individual stocks. So anyway, cold, I'm in for a swing trade as well. Join the professional buyers, right? Lots of large green means lots of professional traders in. So this is a good example. My inverse natural gas play, KOLD, this is one I'm long and strong in. And I'm going to be building a substantial position between 30 and 40. And I expect to wind out that trade starting around 80. So my target is not way up at 100 or 150 or 200, but a more modest trade of the round trip between 25 and 80. So that's the kind of like the life cycle of the trade. One thing you want to do when you're swing trading, especially for a longer term, my goal is to be in this for a long-term swing, which to me is like 6 to 8 weeks, a month or two, maybe even 3 months. For long-term swings, for large, I only do that with charts like this that have really big upside. They've stabilized and started to pivot back up on green volume, and I want to position size or scale in so I can make potentially a whole lot of money. I need to be a little more patient than my day trading tendencies would have me do, and give the trade 4 to 6, maybe 8 weeks, maybe longer, but in the multi-week time frame for a pivot in this. Now in the lower right corner of this chart, what do you notice that's especially bullish? What do you notice about the candles in the lower right between 20 and 30? What's the story they're telling you? Always ask yourself, what's the story of the stock, or the story of the ETF in this case? What's the tale? What's the story? What's going on? Well, I see 5 out of 5 100% green candles. 5 green candles for last week. 100% last week of green candles. And of course, all the volume is green. So we zoom in a bit here, you can see that's definitely an upside reversal pattern. And that's definitely something I want to trade extremely large size in. I'm already in some significant size, but I want to build really, really significant size because I see lots of money in my future in this, potentially. So I'm going to build the trade. Now, to learn exactly where to get in, and also, more importantly, how to manage exits or where to trail stops, be sure to join my live room because there exclusively I'll be telling you guys exactly, and all my members know I'm very specific about entries and exits. I'll give you step-by-step walkthroughs on how to swing trade this. So that's a good play. Another one, of course, is SQQQ. It's been a monster, right? Anyone else swing trading SQQQ like I am? This one I've been trading for weeks now, and you can see our short NASDAQ. Short technologies doubled in value from 30 to 60. You will never hear talking heads on financial news TV. I won't mention the C something channel. You will never see my job's to entertain you and blah blah blah. No, my job is to help make money, and so you will never see talking heads talk about something that could have doubled your money over the last 2 months. That's a fact, right? This thing started off at 30, it's now up at 66. But yet, none of the talking heads talked about SQQQ. I'd be very suspicious about the people on television because they don't tell you what works. They say, well, buy quality oversold stuff on dips because if there's got a solid PE ratio and solid earnings and it's a real company, then derp. Epic fucking fail. What we want to do is buy stuff that goes up. Not buy stuff that's, oh, well, you got to take some pain and buy it on the way down because you're a moron. Don't do that. Do what I do. Buy shit that goes up, all right? SQQQ. Boom, nailed it for my live room members. Big win. I also like, and I'm long that. I'm long TZA. That's our small cap Russell inverse. A little more random, but really good run from 28 to 50s. And our finance inverse, FAZ. Similar rockstar chart. And of course, to capitalize on the VIX, our UVXY has been less of a certain chart, but it's got huge upside, right? The thing ran from 11 to 20. It backed off of 20. You can see a shooting star right there, right? Shooting star. When you wish upon a star, you sell that sucker if it's a shooting star. You sell. And then you buy up here. Sell, buy. Here's like, I just bought a couple hundred shares on Friday for that of it. I want to start scaling in this significantly if it gets over 20. But for directional traders, I'm going to play SQQQ. Or I also like SARK, S-A-R-K. The opposite of Kathy, somebody's innovation fund or whatever. I like to short her. Okay, so I've been long SARK for months. I think I'm up 43% in my SARK position. If memory serves. Boom, da-dum-ba-ba-da-ba-bum. From 40 to 80. Bearish engulfing up there. Warning, Will. Warning, Will Rogers. Danger. Got a shooting star, bearish engulfing that says to sell a loss of that. Again, for candlestick training, learn from Steve Nissen only at candlecharts.com. He knows his stuff. He's a world's top expert. I've worked with Steve for 20 years. And I'm profoundly grateful to Steve for all I've learned because it works. So candlecharts.com. And my company, trademastery.com. 2 places you got to go. Anyway, so if you want to short Kathy Woods, that would have paid off handsomely, right? But the best directional ETF right now that is the strongest trend is SQQQ. Remember, technology led the market up with all the bubble multi-valuation stocks out there that have come crashing down. And I've been long SQs for a very long time because it's gotten really well. It's doubled from 30 to 60. And there's more fun and games to come ahead, right? This is nowhere near a top. I fully project the market will take out the March 2020 lows by year's end. And I went on record as saying that. And I've been telling you guys to go short the market since right before the November pivot, right? So I've been on time and correct with my calls for the most part. This is a 2-year chart of SQQQ. Now, what you do not want to do is buy stocks that have been beaten down. I tried a little bit, but I took small stops and sold them back. So it looks like the market's really in for a lot of trouble. Now, I did pick a list of 17, but a little egg on my face. I sold them all back the next day because they gapped down. So I still had a list of stocks that if stuff's going to bounce, I like these. Where Disney, Netflix, PayPal, Nvidia, Shopify. But they're still in the speculative. I expect that I will get in on a bounce and then take a stop on a drop. If it does take a bounce and then hold, then I'll scale in. But whenever something takes out a 2-day low, you've got to sell, right? Anyway, I like SQs for a bounce because it came from much higher, right? 230, 240, down to 30. Now back, it's doubled to 60, and it may well get as high as, say, 100 or 120. Somewhere close to about a third of the range here, so. to make money as a trader, what I found is that I do bottom fishing all the time, daily, but I do much better when I do breakouts that are strong. So buying strength is much better than buying weakness and hoping for a bounce, because unless it's an extremely oversold instrument, usually you get a dead cat bounce and it keeps going against you. As we all know, we've tried that. So it's better to buy high and sell higher and trade things that are strong. And again, the financial news TV people, I don't know if they're forbidden from telling you about things that actually go up when the market crashes, but I tell you every single week exactly what I'm trading, where I'm trading it, how I'm trading it, and some food for thought for the upcoming week ahead. Yeah, good points. Thanks. Right. So we have so many good charts. And one thing I want you to look at too is, now if you do insist on buying bounces, I bought, but I sold them back for, it's only a few $100 stop, so it wasn't too expensive because I started really small. And then I sold them back when I saw which way the wind was blowing, which was down. I think I bought, it was 2 or 3 days ago. And then I think I bought Wednesday, sold Thursday, something like that. Anyway, Shopify I still like for a bounce. NVIDIA. Come on, NVIDIA. Maybe good for bounce. I especially like Disney because it's got brand appeal. But again, I think I bought it somewhere like 96, sold 95 for, something like that. Anyway, this may be Disney I want to especially play over the 100. So if Disney ever gets back over 100, it may have some room to run in Netflix and PayPal. But for right now, it's a very toxic market environment, so I'm not going to be swing trading anything other than inverse instruments like short crude oil because of the big bounce. One thing to pay attention to visually, and I'll leave you with this, we're going to wrap up here in just a minute, is look for the height of the green candles and give preference to, if you're looking for pivots or breakouts, you may have heard the phrase expanding ranges, or if you look at things like the average true range indicator, it's always important to look at the ATR starts to increase, and obviously it would lately here. You guys should all realize that, right? I mean, I used to be a statistician for Ford Motor Company, so I'm a hardcore numbers guy. I don't need squiggly lines on charts to tell me things because I can pull out these signals that I need from the data set that's evident, the raw, unfiltered data. But if you need a squiggly line chart, hopefully you'll see that the average true range ATR squiggly line at the bottom will have been going up this last week compared to the week before and the week before because the average range of the candles is getting larger. And in this case, it's green. So it's still a downtrend unless we break a previous peak up here. So the place to get serious about SEO, where I'm going to start deploying large capital, is if we get over that break of the trend, which would be over 25. That's again, a downtrend is lower lows and lower highs. So it's still in a downtrend technically until you break and hold over for at least 3 days the previous peak high. So the strong signal, and I won't say trust me on this, but write this down and just see how accurate I am. The best signal for short crude oil would be if we have 3 days above 25 coming up in SEO. And it may not occur for a couple of weeks or so, but whenever the short crude oil gets over 25 for at least 3 days, that's a very, very, very strong buy. Every Wall Street trader, every CMT, everybody knows how to trade is using that because that's the previous break of a downtrend, right, which would be there. And the reason we care is I don't think crude will get back to 50 a barrel anytime soon, but if we get to 70 or so, we can make a boatload of money because this had been up at 400 just a while ago. Anyway, so big range in this, and this is something that is speculative, granted, but if crude starts to drop for whatever reason, this may be good for a big upside run. Just like our SQQQ, right? That's a healthier chart because it's more, how to say, the thing I like about SQQQ is that the bounce is on, but it's not too late. Because you know what it's like, right? You don't want to chase something after, well, I thought it would be a bounce here, and it ran way up here, and now I'm wondering what to do. It's not done that. It just started the beginning of a pivot to the upside, so it has lots of room to run. I easily see 120 as a target or so in this chart, given where it came from. And again, this is how to short technology. So fellow bears rejoice. I've done really well with some of the inverse plays, and I hope I can be of help to you guys too. And yeah, crude may drop. Hey Jim, let's see, drip versus SCO. Okay, let's take a look. The thing that I care about is range and volume. Volume and volatility, in other words. So if we look at our drip chart, someone asked me to look at drip versus SCO. That looks good too. That has better range and volume is actually that. But what do we see? What do you notice that's in SCO that's not in drip? Comparative analysis. What's the delta on this? Lots of upside. So yeah, I'll take a shot at drip. Thanks. I'll trade that myself. I'll trade that my dang self. It's another way to short. But the problem is what? Look carefully at the candles in the lower right. We have one large green candle. So that is a jump start, a kind of like a jump start to a car. It snap. You got a spark of electricity. So it is worth taking a shot at. But what do we see about SCO? Comparison. It's got good volume too. So they're both good. The thing that I notice in difference between SCO and drip, it's 20 to 400, so it's a 20x range on SCO, and the drip range 20 to 600, even more. Okay. What I don't like about this though is that the slope of the line is much flatter on the downturn. So it's, I'm gonna say, the volatility is likely to be higher on this, and so maybe more difficult to trade because it's less of a consistent downtrend. And similarly, it may have a more spike on the uptrend and maybe harder to trade. But yeah, I like it though. Yeah, thanks. Drip to volume's good if we look at the 3-month. Okay, now what's the difference here between drip and SCO? I like the increasing candles. There's another quick signal that I really like is from a momentum trader standpoint, if you see a sequence of 3 candles of increasing height like we see here, right? Small, medium, large. Or venti, grande, whatever you get. Small, medium, large cups of coffee. We've got larger increasing candle heights here in the drip chart. If we take a look at SCO in comparison, and see it's not as extended. So my thinking is drip is more volatile and dangerous, but there's a lot of potential in it, but there's a lot more hazard in it. I think SCO is more consistent, and I'm not going to say it's a safer chart, but there's increased volatility in drip that can really bite you in the rear end if it goes against you. So that's my professional assessment. Drip has higher risk and also higher reward. SCO is kind of middle of the ground, more intermediate, and I feel safer I feel much safer. Excuse me, trading SCO than drip. But thank you for the heads up in drip. I will trade a small position, and I will get the way to trade that. By the way, just a good professional insight is. With something like this, you incrementally scale in more consistently. With something like drip, you space out your scale ins much further than you would SCO. SCO, you incrementally trade up. Drip, because the violent up and down nature of that instrument is more dangerous, so you space out where you enter. So that way you've got more unrealized P&L from your winning first position to subsidize a pullback, which may very well occur in the secondary trade. So space out your entries wider, and I hope that helps. That's honestly, that's a really good tip. And drip, it's dangerous, so trade smaller initially and space out the entries at least say 5 points or something like that. This one I'm going to trade every $2 and I'm going to incrementally trade it. So that's the biggest difference I see in evaluating those two charts. And that's a institutional client grade answer. So I hope that helps you. And that was a good answer, and it's honest. It's correct. So they're both good. Drip is less safe and therefore manage risk by smaller positions on the front end and space out your scale ins, your position sizing in larger increments. All right, what else? Yeah, Bob saying, yeah, drip is 3x. Good point. All right, well, I'm out of time. Sorry, I got a lot of people asking about different equities, but I'm going to have to take off because we're at the half-hour mark, and I promised everybody we'd end on time. So thank you so much for being here. I appreciate you guys for taking time out of your Saturday. And I hope that I've given you an intelligent look at things that are actually likely to do reasonably well, like I've been doing for almost 20 years. So again, if you want to join my live room, I'll answer all your questions there, and we come up with more. We got a really good teamwork approach with a lot of smart alerts from people who have been with me for years, and we all know what to look for. The neat thing that Trading the Open offers and no other chat room offers is me. So that's number one. But also number two is the traders that have been with me, some as long as 18 years now, have been with me. My live room I started 20 years ago, and I've had people with me for many, many years. And we all know what to look for as a team, the very specific setups in terms of the type of charts that are worth trading, not the random under $10 low float crap stocks that video game kids trade, but instead things that we still trade things under $10 but more consistent, stronger, more powerful charts, not the straight up momentums that pop and then drop. Oh, you buy up here and then it gets halted and gaps down and you lose it. We don't trade those. We like things that are more consistent. And also you get specific answers with me. So anyway, thanks for being here. I do appreciate it. I will see you guys in the live room. For all live room members, remember we get back to work on Tuesday morning. It's a 3-day weekend. I wanted to wish all the best for a safe and a peaceful weekend ahead. And if you have any questions, feel free to drop me a line at ken@trademastery.com. That's my email, ken@trademastery.com. Or better yet, much better yet, click on that blue support tab at the bottom right. And that will make sure that your message gets delivered both to me and then my return message to you. So take care, trade smart, be careful. Don't trade alone in this kind of market environment. You want to trade with the guy who's been doing it for a couple decades. So hopefully I can help you guys out. So take care and best wishes. Have a safe weekend, and I'll see you guys next time. Bye for now. Trade smart. Make some money out there. That'll do it. Have a great weekend. Bye for now.